Welcome back, everybody. CNBC has partnered with Acorns, the saving and investing app, on a financial wellness and education initiative called Invest in You, Ready, Sec, Grow. And joining us right now is David Byrne, the founder of BrightLights and singer of a lot of great songs. David, certified
awesome
fraud examiner and calls himself a financial detective. His company is focused on helping professional athletes understand their finances and decrease their risk of being defrauded by their investment teams. And, David, that's something we would all like to know, some of these red flags along the way. So the first red flag David actually encourages people to look out for is a lack of oversight. You want to explain that a little bit, David?
Sure. And thank you, Becky and Joe. It's really great to be on the show.
Great to have you here.
I also enjoyed the intro song.
We did that for you, David. How could we not?
I thought it was for us, Talking Heads.
Yeah, you thought it was Talking Heads. I said, no, David Byrne is on. Awesome.
It's a great song for everyone.
It is. It is.
So, yeah, the first sign is oversight. And oversight is essential when it comes to identifying and really just mitigating the risk of fraud. And the reason for that is that financial advisors, what typically happens in a fraud scenario is they get into a financial problem. Sometimes it's going to be, a gambling problem, a drug problem, anything that may have some sort of financial pressure. And what happens is they're going to then look to their clients for an opportunity to take the money that they need. Now, if you are overseeing your investments and the activity that's going on and keeping an eye on it and asking questions to the advisor periodically, he's going to know, he or she will know that, this person should not be, I shouldn't take the money from them because they're looking at it. So oversight is one of the biggest deterrents because, like any other criminal, a fraudster doesn't want to get caught. And so if they know you're looking, they're not going to take it from you.
All right, let's take a look at the second red flag, and that includes conflicts of interest. What should we be doing to make sure that we know about conflicts of interest? How can you kind of protect yourself on that front?
Yeah, conflicts of interest it's a very kind of heavy term because there's so many different ways that conflicts of interest can present itself. And so to explain it in the most simple way to the average investor, the way that I tell them is what you want to do to minimize conflicts of interest in the advice that you're going to receive is hire what's called a registered investment advisor. Now, what a registered investment advisor will do is will provide you investment advice solely in your best interest. And on top of that, what I say is to look for somebody with an advanced certification. And so that's something like a CFP, a certified financial planner, a CFA, chartered financial analyst, something that shows that they really have put their time in to be an expert in their field and provide the best advice. And it's the conflicts of interest that do present themselves are hard for the average investor to identify, to understand. And so I think just this way of starting out and understanding who your financial advisor is, whether he is a registered investment advisor, a broker, or a duly registered investment advisor is really important.
Sure. Finally, let's look at that third red flag. That's excessive fees. How do I know it's excessive?
So this is something that goes along with both oversight and having the right financial advisor. It's kind of like passing the smell test. What you want to look at is understand, on one hand, you have your advisory fee. So say that that's 1% that you're going to pay on an annual basis to your financial advisor. On top of that, there's going to be investment fees. Now, that may be with your mutual funds, with your exchange-traded funds, commissions on stocks. What you have to do as an investor is understand what those fees are and what you're paying and how often. And the reason for that is a lot of times these fees are hidden or they're hard to identify for an average investor looking at his or her account statement. And so it's really important to have conversations with your financial advisor to understand the fees that you're paying on the investments that you have and really just open the conversation there. Because what happens is with excessive fees, what's going to happen over time is that's going to drastically reduce the amount of your return. And you really need to be on top of your game for that.